Hi, welcome to the Market Alert for Wednesday, the 27th of January 2021. So most shorted stocks, a massive melt-up continues, bonds, Bitcoin and bullion flat. Let's play the game of global thermonuclear melt-up. As it says here, the game's not over. Well, it certainly isn't at the moment. As we saw yesterday, as the market just moved straight up from the futures open, which I spoke about. The market was at the lows, which we'll look at in just a second. And more news. Buyback surged to highest level since March. Buybacks by Bank of America corporate clients over the last 3 weeks have picked up their highest level since March of last year. Again, cheap money, buy back your stocks, keep the values up, keep the share price up. And again, Bank of America warns that take profits ahead of coming correction. There's got to be a correction. February is usually a risky month for investors. Yes, you get the euphoria after Christmas, and then you get the corrections, as we saw last year. But of course, last year was slightly different with the arrival of the virus. Meanwhile, on the implied volatility front, this is actually up yesterday. We can see we've got 3 consecutive days of rising implied volatility. So again, for me, I think we're in corrective territory with the end of January going into February. Going to do what they can to hold the market, as we saw yesterday, try and bring it back, but we are due for a correction. The euphoria and the melt-up that we've seen recently is just extraordinary. So again, keep an eye on the potential weakness coming into the market and corrections. I'll talk about that in a moment, how to spot it in the daily chart. And then again, this is actually should be amber. I forgot to change the color there. It's green, but again, we're getting an amber warning there, but that green dot there should be amber, so we're still above the 20 bar moving average in the implied volatility. Now on to news before we look at anything else. Now yesterday I missed a news item because they're getting a bit sneaky with this. They keep downgrading what were considered high impact news items down to medium and then down to low impact news items. And one of these yesterday, if we just go back, can we go back a day? Yeah. Was the UK unemployment figures, and they moved these yesterday to a low impact news. So we missed this, but it supported the market yesterday in prices moving to the upside. And this is what happened. You'll see here that the jobless rate hits 5% as unemployment rises by 202,000 in 3 months. So what they did was say, well, actually, it's not as bad as we thought it was going to be, because they forecast 5.1, came out at 5%, and that's good news. So the market was allowed to move to the upside again, which we'll look at shortly. But let's start off by having a look at the Dow daily. We can see that the market yesterday for the Dow sideways to higher, back above the 20 bar moving average yet again, and also overnight prices coming back and sitting at the 20 bar moving average for the Dow there as well. So I'm just going to remove this fib, and on the Dow it's going to go from this low to this high just to see where the support is likely to be on the downside to coincide with the 20 bar moving average, so around the 50% area there. And then of course you've got your selection there from 62, 78 and 89 down to 50% fib from this low to this high. So again, this is going to be a crucial level, this 50%, because not only is it a fib retracement, but also the low of this bar, which is Monday's, where the market was brought back, Tuesday the market sideways. There is still weakness around, as you can see on the overnight. And yesterday in the DAX, the market moving all the way back to the upside with less volume than the previous day's selling. But mission accomplished, but they didn't quite make it back to yesterday's high, which I thought they would have done, but not quite. So we're getting lower highs. So the fact that they couldn't bring the market back above yesterday's high, or rather Monday's high, is very interesting and important there. You'll also see that the 5 bar and the 20 bar are together. Again, indicative of weakness coming into this market. So if we move to the downside, we can expect a bit more weakness. I'm going to have to draw this in from, as we haven't got any other one, we're going to have to go from here to here on the fib retracement to draw this in, and again you'll see we just replicate what we had before. Now I'm going to leave these in because even though we've traded down to these on Monday, which you can see there, we've come back, so now it's a case of seeing if the market will hold back on the downside for all of these fib retracements that we've got here as well. So again, make a note of these areas just in case the market does decide to do a straight reversal today. However, if they support the market, then on the upside we need to look from this high to this low. So let's just draw this in, and there you can see on the way back as well we've got these two figures here, 78 and 89, because the market's already come back to these as well. We're stuck in a sideways move effectively. But if you want the longer term one from this high to yesterday's low. Now I'm just going to delete this other fib retracement because I want to just bring something else to your attention here. To work out where the market's likely to find resistance on the upside, if we get a rally in prices here and prices move to the upside and get to 89 or 78, then you can look for potential weakness at this area before the correction then starts on the downside. Just as much as we've had this here, actually, if we go from here to here, you will see the market coming back to that 78. And again, let me just delete this out of the way to make it a bit clearer, and this. So as the market put in this new all-time high, it then moves lower and it then comes back. So from here down to here, you'll see the market coming back to this 78% there, and then the market moving down. But of course they've brought it back, so what we're doing is just seeing how much more they can actually bring it back before it's allowed to move to the downside. And this is why the daily chart is really important. Okay, let's have a quick look at what to expect today overnight. Let's have a quick look. Prices have moved to the downside. That's where we kick off, isn't it? There we are. Yeah. So prices already below the 200 MA overnight, early hours. There's the high of yesterday, below the 200 MA and back above that at the moment, and the DP. So at the moment we're trying to hold the market above the 200 MA. At the moment we've got all three averages lined up. We've got 200, 20 above and 5. Bit of weakness around there at the moment, but they're going to do whatever they can to try and bring the market back to the upside there. Just going back to the news, I've just realised that we didn't look at today, so let's just have a quick look. And now I've had to include the low impact news items just so that we don't miss anything. Here's another classic example actually that just jumps off the page, is crude oil inventories. This used to be high impact, then it went to medium, and now it's low. So no surprise that they're doing this. Interestingly enough as well, this one, Fed funds rate, never in a million years a few months ago would you consider this to be a medium impact news item, because interest rates are one of the tools that they use in order to keep the illusion alive that everything's fine, move rates to the downside, which they will do. Make no bones about that one. They'll go to zero, if not negative, at some point. So yeah, what else have we got for this morning? We've got shop price index, which is already out, minus 2.2, no surprise. So 7 a.m. we've got the German consumer climate. So obviously it's a gauge of how much consumers are buying, etc. So minus 7 for that as well. But other than that, it's FOMC day. So the market could trade sideways to lower, or sideways to higher, or just sideways today, waiting for Fed statement this evening at 7 p.m, which has turned out to be a bit of a damp squib for the last several months, of course. But we'll have to wait and see. Okay, let's have a look at yesterday's price action and see what happened. I'll come back to the start. And as I mentioned yesterday in the market alert, the low really important, and as I also said that they would probably bring it off the lows in the futures market, and they certainly did. And this is the way it went from the start of the session. The market in the futures moving up 50 points there between the BRNs, slightly above, finding a bit of profit taking there, and then interestingly enough, prices coming back to the 200 MA there. We've got a bit of selling, but the market coming off the lows, and then prices sitting sideways. And what I did here was just draw in, like I've just shown you in the daily chart, we've got this high, the market puts in a low, then comes back 89.78. Market also coming back 50% as well here, from this low to this high as well. So that was a 50% retracement at the 200 MA, and then prices starting to trade sideways. And then I just removed everything as we started to move to the upside. Just having a quick look at the daily, see where we are. Prices coming off that 50%, and it was just straight off. And the key here was the market sitting at that 200 MA, remaining green, not closing below the 20 bar moving average. And then the rest, as they say, is history, because they use that news to move the market to the upside. Bit of a battle to begin with, but again, closes below the 5 bar moving average, but immediately prices are brought back with more volume than in the selling bar, more volume again above the close. There's a bit of selling here, or absorption of selling, because the volume is more or less the same as the previous bar, and then prices hold above the 5 bar moving average and the close, leaving the market then free to drive higher. And you'll see some profit taking at the DP, again increasing volume. Markets brought back again. Prices come back to the 5 bar moving average, trade sideways, and you see an increase in volume there before the market moves through the DP level, or attempts to. A bit of a struggle there. This is why I drew the line on against the recent high there. The market came through, increase in volume back below the 5 bar moving average. So what's going on here? The market saying, okay, well, if you want to sell, let's just bring the market down and see how many of you are prepared to sell. And then when you see this bar here, nobody wants to sell, so then they reverse prices once more, which you can see the increase in volume. Then if you're not going to sell, then we'll buy back, and the market then goes back through the DP. Still got that resistance to the left. I just kept drawing these in. There's no selling around. The market shows the increase in volume, even though it's below the average line, to drive through the 767 area, and then it's just a matter of keeping things moving. But we've got a selling pressure here. Again, you can see the range of the bar is less than the previous bar, volume is greater, so there's some pressure in the market there. And prices trade sideways. I'll keep going back and checking the daily chart. We're now heading up towards 38%, and prices staying above that 5 bar moving average. Each time it closes back below, the market is brought back again. You can see, well, let's just test, see how we're going. And then prices through the next BRN, increased volume, some selling pressure there in this telegraph pole, potential weakness. You can see the volume is greater than the previous bar, range is less. So a bit of weakness around now, having moved significantly to the upside. And you can see again, as soon as prices come back towards the 5 bar moving average, they move back to the upside, heading towards 50% in the daily chart there. Just bring this back again. You can see there now at 866. And there we get a big spike in the volume as prices hit the next BRN, just coming back below the 5 bar moving average. And that's the first time prices hit the 20 bar in the whole of the morning's move. And again, just by using the 5 bar moving average to measure momentum, the short-term momentum, you can see that each time it closes back above, the market resumes its move to the upside. We then had a potential sell signal. Well, given what's going on in the daily chart, trying to get prices all the way back, it's going to be a risky job. We're going against the trend. They want the market up. They're going to do whatever they can. They've done it for 13 years. And you'll see exactly what they did here. So we had this potential sell signal. We've closed below the 20 bar moving average. The 5 bar is below the 20 bar. But prices just get to the entry price, and I'm just going to bring this back and I'll show you why I got out of this trade, because there was no sign of it going down. In the 1 minute chart, prices move lower, which is this bar here, and then the next minute you see them buying back in the 1 minute chart. Same volume as the previous bar, range is narrow, and they show, or the bar shows green, show the buying. They tested the market, and then they bring the market back as prices then move to the upside. So I decided to get out of the trade, and then through the morning the market traded sideways, and then had another spike around 11:30, which I'll show you here in this chart. Wrong market. Let's just get the DAX, and you'll see at 11:30ish they drove the market up again. And there you go. So prices traded sideways, then to the downside, and then around 11:30 they sent the market up once more, moving up to the R1 as prices continued higher. So let's just have a quick look at the afternoon session, which is basically sideways. I'm just going to whiz through this because the market, having made a significant move in the earlier part of the day, in the morning session, prices just traded sideways. We had some news in the afternoon, and you'll see there it was just consumer confidence, and that came out more or less as predicted. Just slightly better on the consumer confidence. The Richmond Manufacturing Index lower, but the market had already made its move, and you can see it just traded sideways, just trading water for the afternoon. So I'm just going to whiz through this. Again, we had a sell signal, but given what was going on in the daily chart, again you'll see that price is really holding at this level. You can see them buying back in. Like I say, normally I wouldn't have considered getting out, but the backdrop was they wanted to get the market back up, and then there was the high that they were likely to gun for, which they didn't, as we saw earlier in the market alert. So again, you'll see they're doing exactly the same as before. You've got the buying pressure, and then you've got them testing in the 1 minute chart, which all took place in this bar here. So I'm just going to fast forward through this. The market then put in a potential buy signal, which wasn't filled, and then it just traded sideways for the remainder of the trading session. Okay, that will do it for today. If there is anything to bring to your attention, I will do. But as ever, thanks for watching. See you in the next one.